So
Correct.
we have our esteemed speakers here. Mohan, Sushantam, who is the Chief Product Officer for Vivriti Capital. Yeah, Vivriti Capital. And Amit yeah, Mande, who is here, who is the Chief Revenue Officer for YouGrow. Welcome, Amit. And this is about Omni-Channel lending, redefining customer experience in the digital era. And our last session also, we have touched upon this issue and some of the points we have discussed here. So I will request, in fact, Amit to start the discussion. And you can talk about your experience about how the digital lending is evolving and what are the emerging challenges and opportunities.
Thank you. So I think we had a whole panel on digital lending and very interesting things obviously came through. But it's a fact, right, that the data system has been evolving over the last 7-10 years, whether it's the identity stack, the payment stack, the banking stack. On one side, more and more, it's not just about lending, it's about the other industries that have been formalizing. It's been the supply chains that have been formalizing. And with all that, there is a lot of data. And that's really helped the digital lending to evolve so quickly. That apart, I think it's been the need of certain lenders and fintechs. I mean, why will they exist? They exist because they saw this opportunity to reach, to harness the data, to use technology, and then reach to the consumer. So there's no question that this is on the forefront. I think it's more or less a topic that's been discussed and debated too much. But what comes with this digital lending is, of course, and I remember a gentleman saying, responsible lending, ethical lending, data privacy issues, and really fairness to the consumer. We've seen a lot of actions by the regulator, prima facie because I think it's been, the regulator is only trying to say one thing, is like be fair to the customer and not only just adhere to the guidelines, but in true spirit. And so that's been missing somewhere, and that's why the guidelines had to come in. And so where is it going is really the question. Digital lending, I think it's moving in a direction where now people have understood how to harness data, people have understood how to build credit models, people have understood how to get payment systems. But is it touching the customer in every manner? And I think that's where you spoke about Omni-Channel, and that's how the digital lending will further move, is to touch the customer through various channels that are available. Technology has helped improve processes, improve turnaround times, improve credit quality. But at the end of the day, when you go try and touch the customer through multiple channels, I think that's where the next story goes, and you will see a lot of people using new modes of customer touch points. It comes with its own challenges, but yeah, I think that's my view on digital lending to begin with.
So everyone talks about the opportunities arising because of digital lending. I will request you to talk about what are the challenges and problems arising because of this.
Sure. I'll actually talk more from a B2B lending perspective than from a B2C lending perspective, because I spent my entire career in B2C lending space, right? And the kind of innovations we have seen in B2C is quite significant. I mean, I think Amit spoke about a lot of tech stacks that India has, which have been encouraged by the government, RBI, and all these entities. But in a B2B, so Vivriti Capital is in the B2B space, right? We lend to mid-corporate segment, we underwrite bonds, we do a lot of co-lending, right? So the level of innovation in B2B is significantly limited in my perspective. But the data is immense. I mean, there are 5,500 listed entities in India. I think there are close to about 50,000 profitable MSMEs in India, right? And they share a lot of data. I went through the entire MCA dump, whatever the companies are supposed to file with Ministry of Corporate Affairs. And like Amit mentioned, the amount of data that is there is significant. But here the challenge is that I cannot lend an amount of, let's say, a 15 crore or a 20 crore or a 100 crore only through a digital channel, right? So I don't think we have evolved to that extent. Digital has probably caught up in small ticket space where the entire journey has moved online. But in a big ticket space or in a secured space, we still have a lot of things that we need to solve. Even in a retail space, if I want to do a LAP, right, loan against property, I need to create a mortgage, I need to create a security. Those things are still not and still not completely digitized. And that is where I feel omni-channel approach is much more helpful, wherein there is an assisted journey. There is obviously a digital journey for discovery. There can be a digital journey of collecting the data, standardizing the data, making sense of the data, using that data to run your internal ratings and limit model, writing your credit notes and all that. But again, there's an assisted journey wherein if a MSME, if a small shopkeeper, if a dealer, if they are not able to use an app, probably we need someone there to help them upload invoices, complete the onboarding process, KYC and all that, right? And that is where we operate in. And the only point we are trying to solve it through all the technical innovations in an omni-channel approach is to drive efficiencies. Once you move online, the only efficiency you can solve is speed. But in a physical setup, you can give all the tools to your feet on street so that they are able to turn around much faster than your competitors. That becomes your USP. And that's the problem that we are trying to solve at Vivriti.
I think just to add, and he touched upon the omni-channel assisted journeys. The problem that happens with these so much talked about omni-channel journeys is all these channels evolve as a period of time, right? Whether it's everybody started with feet on street, then came the web, then came the app, then came the WhatsApp, and so on and so forth. And because these were sequential, these are more or less siloed journeys or siloed interfaces. The problem that I think the lenders are solving is a more consistent, more integrated customer experience and portability across these journeys, not only just on onboarding, but throughout the life cycle of the customer. And I think when we look at a good portability across, and let me give you an example, and whether it's MSME or whether it is consumer, a consumer can apply online but use the credit offline, or use the credit on the app, or use the credit in an integrated somewhere embedded solution, or on an app for supply chain. I think this portability and needs a lot of architectural thought process on technology and needs investment. And that is where, when do you get to this whole omni-channel integrated, consistent experience is the question in the evolution of the organization. I think it takes a lot of investment, and somewhere there is a mention of almost 85% of the NBFCs wanting to do investment in their digital infrastructure. But I think one should be conscious of the fact that it's not a day one requirement, and it will evolve over a period of time.
I think the speakers have given their initial remarks, and I will, if the audience has any questions to ask, I will, yeah. So please introduce yourself and ask the question. Deepak, if you can have the mic there. Mic, please. No. Yeah. You could start the question anyway. Yeah. Mic. Yeah.
Yeah, I have a question for you regarding all the PAT. Another actually sales out is doing the bureau check, right? So CIBIL and other CIC platform. What about digitalization of those platform, uploading the data? More particularly now from 1st January 2025 onwards, the data has to be uploaded on 15-day, the fortnightly basis. So if you can throw some light on it.
Yeah, and that's an interesting problem to solve, especially when, let's say, in a co-lending setup, I'm not the one who's servicing the customer, right? So I have tied up with X number of digital partners or non-digital partners. They are the ones who are servicing the customer, interacting the customer. I have technically provided my book to them to go ahead and lend, right? So I've extended a line against which they lend. And I need to have a platform where using the platform I disburse, and the same platform has the capability to collect the data from the servicer. For sake of example, let's take MoneyView. So I need a platform where MoneyView can upload the collection information, a recon module to make sure that whatever MoneyView is saying has been collected actually has flowed into my bank account. And those are complex problems to solve. For a typical lender which is lending directly to a end borrower, I will have the entire information, right? I have disbursed, I'm the one who's collecting. But a co-lending model that is growing by leaps and bounds, if you see across the industry, there is a servicer aspect that comes in. Ingesting that data, doing all the ETL, making sure that the data is in the right format, and then there's a well-defined TDF format, right, which TransUnion Civil have, TUDF format. How do you make sure that the data gets converted into that format and gets pushed to the bureau digitally through APIs? Right now, honestly, a large part of this entire value chain, and that is what we are trying to automate. Automating is easy as long as you have timely data available with you. And ensuring that the timely data available for you is something that has to be changed quite immediately. I think January 1st onwards, we have to do it twice a month, and then everyone is fully aware of it. And obviously, no one would like to scale the ops team, right, to continue to do the manual process. The costs cannot be justified. So that is something that we are planning to solve as soon as possible.
Can I quickly add? And it's not only in co. So, gentlemen, to your question of co-lending, non-co-lendable base. I think first for non-co-lendable, which is completely an NBFC's book, these are automated systems even today. I think the frequency has to change. I don't think, is it too much of a problem for data flow? On the co-lending piece, and we do a lot of co-lending upwards with the banks, and lenders have really not been able to create their own platforms. Some of them have, like Vivriti has one. But there are enough middlewares now, and one of the middleware has a booth here as well, which are effectively integrated not only with the NBFCs on the other side, the public sector banks on the other, on one end. And this problem is made quite easy in that sense, on whether it is recon, whether it's data, whether it's integration with the bureaus, whether it is sending data timely. And I think this problem was about a year ago when there were no platforms, but I think there are a couple of largely three, four middlewares who are doing this. The question today that comes to my mind is not about these middlewares being existing and the data flowing and they're helping us recon. The question is, there's so much data. It's about 25,000-30,000 crores of co-lending that's happening annually. Those platforms are not regulated. And that kind of should raise the antes with the regulator when we look at so much data flowing through these platforms. But otherwise, I think whether it's UB, Night FinTech, MoneyView, or multiple platforms, I think these are solving this problem. More or less, this problem to us remains solved.
Thank you.
Excellent. Any other point? Yeah. Please give your name and organization, and then ask the question.
I'm Satish from Sundara Finance. So, add to what Sir was saying, especially in the B2B segment, do we have anything? I'm not aware of it. From the regulatory perspective, from RBI angle, is there anything, something like digital audit is happening? Because there are multiple software partners are there offering different kind of solutions. So, are they all alignment with what RBI says?
So, first of all, RBI has a very peculiar way of giving any circular. It says that this is what needs to be implemented.
Absolutely.
Right. And then there is a last line that the circular has to be implemented in spirit. Right. This spirit is absolutely subjective. But as a lender, I think all of us have to be cognizant of the fact that we have to be responsible, ethical lenders. Finally, the guidelines of what needs to be monitored, controlled, regulated has to be in the lender's DNA. If you decide that, there is a gray and I want to play in the gray, then that's the DNA of the organization. If the DNA is to be transparent, reliable, and clear, and really in spirit be fair to the customer, then that's the DNA to the organization. So, to answer, there are so many platforms. It is firstly up to you to figure out, the organization to figure out, these are the control mechanisms, these are the monitoring mechanisms, and these are the reporting mechanisms that I need. Have a right checklist there. and then evaluate platforms. But more or less, the platforms today are as evolved as the compliance departments of the NBFCs, and so they go and do a decent due diligence on what is required. But you're right, that remains an area where there is no one answer. For example, co-lending, I said there are 3 platforms we work with, we know they are tried, tested, but here I think there are multiple. Can't put my finger to 5 platforms that could be used perfectly for this.
Come
on.
Yes, sure.
Well,
Yeah.
Even on the co-lending part, still there is a lack of clarity from the RBI.
Yeah. So see, sorry.
I don't know why there is lack of clarity from the RBI.
Between NBFC to NBFCs.
There is no regulation on NBFC to NBFC. So RBI doesn't want to even give clarity. The fact that the concept of co-lending was, and it came in 2019, which came with a CLM1 circular, was that there was a liquidity requirement for the MSME and the priority sector, right? And RBI says that here are the custodians of liquidity, the public sector banks, NBFCs, please go and co-lend so that you don't have a liquidity issue. It started with that. It failed miserably. Failed miserably because the NBFCs would decision it in 1 day, and then or 2 days, and then the public sector banks would decide to decision it in 15 days. By then the NBFC says, "Mujhe nahi karna hai dhanda." Right? Then came the CLM2, I think 2020 November, and it took off. It took off primarily because the NBFCs were not worried at that point in time how much time is taken. But the spirit was that it cannot be passive lending. It cannot be pool lending. It cannot be DA. It has to be file to file on a co-authored policy. I think that's been very clear. The NBFC to NBFC is what we found a way out, right? We found that there are large names and large liquidity custodians, and then there are us who want to ensure that we make our liability, our leverage higher by doing this. We make our capital more efficient. And so I don't think RBI even wants to regulate this. This will be like a mutual contract. And as long as, and we've been through multiple RBI audits, we do this, as long as all the fair practice regulations and other regulations to the customer are adhered to, a customer is being lent by 2 people in 80, 20, 10, 90, and there cannot be a CLM2 because there is a minimum holding period. So it has to be the co-origination model, and that's a mutual contract. So why should it be even regulated? The question is the loss guarantee. And RBI was again clear with respect to DLG guidelines that the loss guarantee should be 5%. Again, the spirit being you cannot be a passive lender. There cannot be somebody, you cannot be renting out your balance sheet. There cannot be a fintech system just using the balance sheet, because it leads to entity risk. It leads to fundamental systemic risk of large balance sheets without a customer view. And so they were clear that that it should be restricted to 5%. But largely, I think there was a sentence in the first draft of to the extent of the securitization guideline. I think to take from that, I think it should be restricted to 20%. But otherwise, there is no regulation. I don't think NBFCs want this to be regulated unless you want it to be regulated.
No, I'll slightly differ. I think NBFCs probably don't want to be regulated. But this NBFC to NBFC is probably a gray area. We expect that RBI may come up with a regulation, just like there is a co-lending regulation between NBFC and bank. We do expect the regulator to probably come up with a note saying how it should work. From a verification perspective, customer verification perspective, especially, what the approach we do is we have a clear segregation between RE and a non-RE. If I am doing co-lending with a regulated entity, I can in a way outsource my KYC processes to them just because they are also a RE. If they are a non-RE, let's say Unicards, for example, we are the ones who are doing the entire KYC journey, right? So I am not leaving anything to chance, saying that I am because this is as per RBI, and we have seen a lot of press statements and a lot of actions that RBI has taken. Core activities cannot be outsourced. KYC, credit underwriting, collections, all these are core activities. So So that's the approach. We have a segregation between RE and non-RE, and the verification process differs quite significantly between both of them.
Any other questions from the audience? Anyone? No? So I think already this session timing is up, and we had an interactive session with the audience participating here. So let's applaud our speakers for the highly interactive session.